The market looked like it was going to continue downward. And then what in the world happened on Friday? Riz and I are going to talk about it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to this week's Elite webinar. Now, if you want to get the most up-to-date, unbiased information on the market and really get a deep understanding of what's going on, then you owe it to yourself to smash that like and subscribe button, hit the bell icon to get notified every time we upload new content here on the Riz International channel. But I am joined by the man himself. Riz, how you doing this evening, brother?
Good, Chris, yourself.
I cannot complain, but man, this market is going absolutely bonkers. Now, we told you guys last Friday or last week rather, that Friday was the day. That it was the big catalyst of the week, and oh boy, what a catalyst it was. There was a lot of indecision going into, Friday's unemployment announcement and the jobs numbers, and they did not disappoint. The market looked like it wanted to go red early on, and then the numbers came out and boom, the market just went absolutely bonkers, up over 1% on the day, making a massive reversal from where we were before. If you notice, we're really just hovering here right above 4,200. And of course, 4,200 is a critical zone, and the 200 simple moving average is sitting right there. So there's a lot of support down there, it seems. But man, those job numbers just went absolutely nuts. Riz, were the numbers really that good?
Yeah, they were excellent. I mentioned in Elite and on Instagram in my stories, I said, look, President Biden on Thursday was announced his office said, he's going to speak at 11:30 a.m. Eastern on Friday after the jobs numbers release. And that usually, that doesn't happen. A sitting president does not usually to a press conference or say anything pertaining to macro data. It has happened. He's not the only one before, but this time he did. So that led me to believe that look, it's either going to be stellar or it's going to be absolutely horrendous. So it wasn't going to be any middle ground. So we already knew that, and I said that, and lo and behold, the numbers were stellar. And of course, taking a victory lap and all that. But anyways, that's politics. Yeah, I mean, they were great, but what's surprising to me is the fact that the market rallied this significantly. I think it was like up like maybe 1% and 1.4% or something is what it closed at on the day. You could see that's a massive candle. You alluded to also the fact that we were saying, look, it's getting towards that 200-day moving average. So yeah, the technicals did also point to this kind of thing. But of course, the reasoning behind it is because the jobs numbers. One caveat though is you would assume because of how things have played out before, where the good economic numbers usually are perceived to be as negative for the
Oh, yeah.
market because because like we're looking from the lens of what the Federal Reserve is going to do. So before, good macro data gave the market an indication that okay, because the economy is still running very strong, very hot, the Fed will continue to raise. This time, if you keep tracking with that previous reaction, you would think that great economic data like this job openings, jobs numbers would also mean that the Fed is going to raise further. And that actually is the case. The After the jobs numbers released, the odds of another 0.25% rate hike before the end of the year have increased. I don't have the hard percentage because it's never a hard percentage, but I could tell you the odds have increased. So it's kind of like whoa, it doesn't add up just yet. It's like a I think I'm just blanking on the word, but really it's kind of reverse where like okay, if the Fed's gonna raise now because economic data is good, why is the market also rallying? It's a divergence. So that's the interesting part about Friday's rally. For me, we had our long positions, so we didn't really do too much this week as the market trended lower. Obviously, Friday recouped a significant part of that bearishness for the rest of the week. But yeah, I mean the RSI was oversold. We kind of said we're gonna get a dead cat bounce. Wouldn't be surprised. It just happened to be on Friday with helped along by the jobs numbers, right? So it's going to be interesting to see how we open this week. I probably on Monday depending on how futures open on Sunday, Monday, depending on where we are, I might maybe not do anything because I always look for more of a confirmation. I'm not trying to chase. I'm not trying to get in too early, especially in a market such as this, where I genuinely feel like we're still a little bit frothy. There's still a little bit more um, downside that needs to happen for risk premium to be worth it, right? So by risk premium, I mean if someone's going to buy stocks, large caps, um, compare that to the risk-free rate of return of, let's say, around 5%. You have to have a lot more potential upside to make taking that risk worthwhile. And in a nutshell, that's the risk premium. Is it worth it? It's actually the risk premium's pretty much at significant lows over the last decade when we look at it. So without giving a whole class on, risk metrics and all that, I feel like simply put, the risk is just not completely there. And I say that as an investor, as a swing trader. So again, I don't let bias cloud my judgment in my analysis. But did that mean I completely sell all my stocks and just go 100% cash? Not quite. I still have a few positions open, as elite members know, but I still continue to be primarily cash, taking advantage of good companies at good prices or even better prices, great prices, if I can. But I'm not rushing into anything. And I know that's not what some people want. They want more action, more activity in terms of trades. But I've always said I am not a circus performer. I am not uh, placing trades to put on an act or for entertainment or really anything, and that will continue to remain. So I will not waver from that. So I make it clear we are not trying to trade for the fuck of it.
Fair enough. Well said. I mean, yeah, obviously just one candle is really not enough to say, okay, yeah, this is it, right? We need more confirmation than that. Now, obviously there's a lot of going on in the Middle East right now with, open conflict in Israel. And no matter how you feel about that or what your stance is, that's irrelevant because we're not going to talk politics here. But Riz, do you think that that's going to have an effect on the market come Monday, or are we basically going to be kind of still running off this high that we had from Friday?
Yeah. Yeah, yeah, no, that's great. I'm glad you brought that up. Again, we're not going to get political or geopolitical, but yes, that is a big kind of event that just happened in the last 24 hours. You're right. I think it can impact markets, but not from a classical, oh, it's going to be bearish or bullish for the market. No, I think it's going to impact commodities, right? So we can most likely assume we're going to see a pop in oil. We did see oil get hammered. We're going to touch on that later, of course, but we will get to that. But yes, yeah, there is some turbulence, especially with the statements coming out of Israel. And it's a pretty hard stance. Again, I won't get into the nitty-gritty of it from a political, geopolitical standpoint, but yes, it's definitely um an event.
Yeah, for sure. It's interesting. It'll be interesting to see, honestly, how it affects it on Monday, because usually when we have things like this, if it would happen on a weekday, we'd see something happen immediately. But it'll be interesting what I'm saying to see how short people's memory is rather. So that'll be interesting, I think, to see. But let's take a look here at the breakdown for the S&P 500 and to see kind of what really benefited the most from this huge bounce on Friday. And honestly, it was tech and communications, our high flyers here, really been kind of bouncing up since Tuesday, even though the market was mostly selling off. But seeing a really big jump on Friday, where yes, the other sectors saw a slight increase, but I would say not as sharp as what we saw in tech and communications here. Of course, consumer discretionary is still doing very well, up over 25% on the year. S&P 500 is still, in the green, plus 11%, almost plus 12. Energy rather, taking a bit of a dive here, as Riz alluded to, oil getting hammered. We'll touch on that in a little bit, but everything else is still underperforming, especially utilities is at the worst right now at about almost negative 19% on the year. So, Riz, why did we see this big jump here in tech and communications on Friday? Was it just because these are traditionally more growth style stocks and would benefit more from rampant buying like we saw on Friday?
Absolutely. Yeah, precisely. Higher beta, market leaders, we saw them run on Friday. For me, of course, I did not participate in Friday's rally directly. I mean, I have my positions, like I said. But you're right. They are definitely kind of the bigger constituents that the money flows into and gets bought up during mass buying, like we saw on Friday, like a 1.4% move post jobs numbers. Again, stellar jobs numbers, but under the pretense of a potential further 0.25% rate hike. I don't personally think that 1.4% on a single day is justified. I was expecting a dead cat bounce, a little bit of a dip buy, but for a single day, that's a bit too much. So Monday will be very interesting again, as we touched on with the uncertainty or the current climate in the Middle East.
Yeah, just to throw on that with everything else going on across Europe and Southeast Asia, it should be interesting to see. But let's get to this because I know people are interested. Obviously, as you alluded to, oil getting absolutely slammed this week. I mean, just absolutely taking a nosedive here in relative terms. From the previous high here where we were at about 93.68 a barrel on, towards the end of September, just been going down, down, down. And gold as well has taken a bit of a beating here over the last couple of weeks, really kind of coming down. Now, obviously, any tension in the Middle East should, see some impact on oil prices because, well, that's where a lot of the oil is coming from. But Riz, what are you expecting with oil this week?
Yeah, I'm expecting a bit of a recovery. We're probably going to see that at the moment. Futures open on Sunday, so we're going to see that pop right away, most likely, and then we're going to obviously see it open in the energy sector in on Monday pre-market, with energy stock probably going up, and of course, ETFs that track price of crude oil. That's my thesis. How much is it going to go up by? I don't know, but generally speaking, political angst, geopolitical angst, wars or conflict is usually bullish for oil prices, right? We saw that back in start of 2022, Chris, was it when Ukraine-Russia conflict?
Yep,
Right? We saw that with
February
oil.
2022.
Yeah, so we saw that similar thing. That was a significant rally that we saw. Uh, but yeah, I'm not saying it's going to be like that similar type of rally, but we'll see. We'll see. Right now, it's still early days. Obviously, there's lives at stake, and it's just not. It's not all about okay, oil prices, but just keeping on a market standpoint. Yeah, I think it's bullish for oil.
Yeah, for sure. Any type of conflict in the Middle East is going to affect, oil. And of course, people need that. Last I checked, fighter jets don't fly on solar panels, guys. Just FYI. So as much as Greta would like them to, it just doesn't work that way. So what's going on here with gold? Obviously, we saw a big slip last week and more of it this week. I mean, obviously, gold is still pretty overvalued in my opinion. I know that's pretty much your stance as well, Riz. But what is this? I mean, are we just kind of coming down off of this high, or what's going on here with gold?
Yeah, general selling, not unexpected. Gold moves a little bit slower, right?
Mhm.
Not surprising. We've also seen the US dollar get stronger, right? So remember, we have to factor in that a stronger US dollar, commodities wise, puts downward pressure. Strong commodities, put a little bit downward pressure on US dollar. Again, it's not a direct one-to-one, but generally speaking, so not surprising. We've seen a little bit of a sell-off in gold. Was very toppy since 2022 into 2023. And then right now it's kind of getting to that 1800, 1820 support, right? So keep that in mind. I'm not really excited or chomping at the bit to take a position in gold, but hey, for those that might want to consider it or you find it interesting, this is actually kind of a decent point to keep an eye on for a potential rally, especially you know, with the narrative that gold is a safe haven asset. So like if the world technically is ready to burn or whatever, like there's more conflict and there's more uncertainty, you can assume that maybe that plays into a bullish stance for gold, right? So take that for what you will.
Fair enough. All right. We talked about the bond yields a little bit, but bond yields going absolutely nuts here, especially with the 10 and the 30-year really gaining a lot of steam here over the last week. And so, and the 2 years, which had been flying high and still are in the top spot, really starting to consolidate. So we're seeing a big divergence there, whereas before the 2 year was just going nuts while the 10 and the 30 were really kind of stagnating a little bit, but now they seem to be catching up. And as Riz alluded to earlier, dollar looking really strong, pulling back a little bit towards the end of the week, but still an overall massive uptrend here for the dollar compared to the other major currencies of the world. Riz, what is going on with these bond deals? Because these are just going absolutely bonkers right now.
Yeah, bonds are completely sold off, and there is a potential like positive risk reward setup, asymmetrical risk on the positive side for those looking to go long bonds. Remember, buying bonds essentially when they're down is what I'm saying, because yields are up, the bond prices are actually down. So again, I'm not a bond trader. I care about it from a macro standpoint, yields per se, but I'm not a bond trader. I'm not a bond investor or holder. That's not really my thing. But there is something to be said with the bond market being completely sold off. So yields are so high because the bond market, Treasury bonds, have just been completely decimated in terms of the rate, right? So it's the face value, I should say. So really interesting there for those that might be sophisticated traders and investors that want to kind of also put on a pair trade. The potential pair trade is, again, I'm not telling you to do this, but I'm just saying how maybe like institutional investors likely look at it. Potential pair trade is going long bonds and short equities.
Okay.
Okay, I'm not gonna go into further detail because it's a little bit more advanced topic. But for institutions, hedge funds, all those kinds of things, that's how we would look at it as a pair trade. Long bonds, short equities, and then see it play out over whatever time frame that the thesis is valid for.
Yeah, that definitely makes a lot of sense. Now, before we get into the key dates for the market this week, if I could ask for all of our elite members who are here live, start posting your questions. That would be great so we can get that going. Let's take a look here at the economic calendar. What do we have going this week? All right, looks like we got the PPI month on month and the FOMC minutes on the 11th. So that should be an interesting one. And then the 12th, here we go. Core inflation rate. That's going to be a big day in the market. So keep an eye on that, especially that'll be before the open. So, people are going to be looking at that. And then Michigan consumer sentiments. Nope, no one cares about that. So it looks like the 12th is going to be our big day here with a little bit going on the day before on the 11th. Riz, are you going to be making any plays on this inflation rate announcement, or are we just going to be holding steady?
Yeah, I might be taking some hedges, maybe potential directional trades to play this catalyst. Again, these catalysts are tricky, very tricky. They're kind of a coin toss as well from how the numbers will come out, but also how they will impact and be perceived by the market. But yes, it's definitely going to be a big one. The 12th, I believe, is a Thursday. So 8:30 a.m. Is when all the inflation metrics will release, and it will be quite interesting to see where we go. We also will have eventually coming up, another Fed meeting at some point. I think I'm not sure if it's this month or next month, but yeah, we will be will be interesting to see because right now, yeah, November 1st. So it will be interesting to see because with recent jobs numbers, odds just went up a bit, right?
Yeah, definitely something to keep an eye out. And like we said, we're looking at potential more interest rate increases. So another rate hike possible before the end of the year. And that was kind of what the market was pricing in until we had Friday's euphoria. One just a little quick little tidbit for you if you're looking to play hedges and you're maybe not sure how to do that. Two tickers you can keep an eye on are SPXL, which I refer to as extra large, which is the 3x leveraged bull ETF for the S&P 500. So that's one. And then extra small SPXS is the inverse. So that is the bearish 3x leveraged ETF. So just a couple of little bit of tips for you there. We're not going to tell you which one to take or what we think the right one is because we're not giving financial advice, but just a little tool for the toolbox there for you, just so to give you a little bit extra here on webinar. All right, now Nikhil says thoughts on Merck's and Xylem at current market prices. Well, let's take a look at Merck. MRK, I am familiar with this company, big pharmaceutical company, looking like we found some support down here. That makes sense, from the technical standpoint. Let's just draw that real quick so everybody can see it. So, yeah, I say right about there. We found a very nice support level, getting a bit of a bounce here. So, definitely some potential for more upside, but I would say that Merck has really just been kind of trading sideways here for quite some time. So, if I could talk, kind of where support is at for Merck could be a potential, but man, this amount of indecision on Friday with the market going absolutely nuts is not really confidence inspiring. Riz, what are your thoughts on Merck?
Yeah, great solid company, like you said, kind of been in a long-term channel uh of between 100 and 116, 118. But this is a nice setup, right? We know it's a good company, was completely oversold a few days ago. And of course, the dividend catalyst already done. We do know we have earnings coming up at the end of the month. So just be mindful of that. But yeah, this is a good setup, good company. Just be aware of the earnings, which I think they should do fine. They have a solid track record.
Yeah, for sure. Pretty darn good company out there as far as pharmaceuticals are concerned. I am not familiar with Xylem. All right, XYL is the ticker. This one I don't know too much about. Looks like we kind of found some support here around 89.50 or thereabouts. Let's kind of zoom this out and look at where we've been. So I mean, obviously, it looks like we've been selling off quite a bit since 21. So definitely in a bit of a downtrend, but does seem to be finding some support here from a technical standpoint. Riz, are you familiar with this one?
No, I've heard of it. I haven't. I'm not too familiar from a fundamental standpoint or from a company standpoint. But yes, I have looked at it before. We have at some point in the past probably traded it even. It's been a while, but yeah, you're right. This is definitely a good technical setup. Once again, was oversold, and the fact that it's holding this level is good. I would say taking along here isn't too bad from a technical standpoint with kind of having like a stop around 87.50 and then targeting maybe the 93, 94, maybe even 95 want to be aggressive. So that's a good decent risk reward there. Depending on just kind of like just giving a write out again, not doing too much analysis there, but yeah, 87.50 maybe might be a good stop, and then 95, 94 target for profit.
Yeah, no, that sounds pretty solid. Okay, Yas wants to know, are we still waiting for Enbridge and NEE for an entry? Let's take a look at Enbridge. I know we talked about that last week, if I'm not mistaken, but again, looking like a pretty good technical setup, but man, they have been getting beat down for quite some time and really taking a dive here since about the middle of September, it looks like, really on the downward slide. So let's zoom it out a little bit here. Okay, we got to go way back before we were at these levels. So I mean, yeah, it's definitely been a hot minute since
Yeah,
we've been this low.
yeah, I wouldn't worry too much about it. Enbridge is think of it like a utilities and a pipeline company, large Canadian company. Well aware of it. We have traded it, invested it many times before. This is good. The fact that it's had three even 4 days holding above the 43 area. We did touch on this last week and I said, okay, I'm waiting. We do have another position, Jazz, similar to this, you already know, that we hold. So I kind of held off because I'm like, we already have some exposure like into this, but this is definitely looking good. So maybe this week will be that trigger that we pull on it. But obviously, Leap Embers will know in real time if and when we do.
Absolutely. All right, let's look at NEE. That one's another one I'm not too familiar with. Nextra Energy. Okay, so it looks like it's also seen a bit of a downside here since, well, about the same time, actually. It seems to be a fairly similar chart almost. Yeah, looks fairly similar. So yeah, obviously there was some type of catalyst here. nothing that's showing up here for me. But I mean, from a technical standpoint, yeah, it looks like a juicy dip buy. But man, when you start seeing something like this is a knife catch, if you ask me. Riz, what are your thoughts?
Yeah, this is a big utilities company. So yeah, definitely we know what's happened with the utilities sector,
Yeah.
right? Completely beaten down. Why? Because the market has said kind of what I was saying before. Utilities are there for income and low beta kind of defensive stuff. But when you have the risk-free rate of return being around 5%, and then you're carrying a risk asset, even utilities, it's still a stock, it's an equity, so it's a risk asset. When you're carrying that, is the risk premium there? So we saw that sell-off happen in utilities, continue to beat down. This is very much oversold. And Friday kind of indicated that as a low of 47.50, and then just kind of closing pretty strongly on Friday. So this also has been on watch from last week. I can't say that I'm gonna go in and take a long because this is a utilities company. It is lower beta generally speaking. It's more for like, buy and hold. So it may not be for everyone sort of thing in terms of elite and the style that some people might want to, or most people might want to utilize from an investor, like investment, medium, long-term standpoint. Yeah, I can definitely would say, this is not bad at all. Again, we just have to be careful with utilities, especially in this kind of day and age where there's, I would say, a lot of headline risk because, if you see power outages, you see fires, you see natural disasters, usually insurance companies plus utilities companies get roped in because maybe something happened or there's like we've seen it before, like utilities companies being under fire for causing some little fires apparently in certain states. So like just keep that in mind. I don't know if people have even thought about that, but I just something that's been on my mind when it comes to utilities companies. There is some potential macro risk and headline risk from that standpoint. I'm not saying that's going to be the case for NextEra and EE, but yeah, it's definitely oversold, good for a technical and maybe long-term position.
Yeah, I was just saying that it is the energy company for the whole state of Florida. So obviously we got hurricane risk there. Though we are kind of coming out of hurricane season. I don't think we're due for a whole lot more.
Yeah.
Floridians can correct me if I'm wrong, but I think we're coming towards the tail end of that.
Yeah.
So, good potential there for a bit of a recovery. But yeah, you never know. And we can't tell you one way or another what you should do. But if you want to keep getting amazing info like this, do me a favor and hit that like and subscribe button for me. We need to get more people here on the Riz International YouTube channel. We want to get more people here to help them learn how to trade better and to, give them a little insight on some of these, opportunities that might present themselves down the line. I'm not seeing any other questions in the chat. Riz, is there anything that you're keeping an eye on this week that you kind of want to share with everybody?
Nope. So far, pretty muted week so far in regards to market climate sentiment. Opportunities are more. There are definitely more opportunities. I'm just kind of waiting to get a little bit of an idea. Are we kind of clear of this 4,200 support area? Are we going to break below? Obviously, Friday was massively bullish, so it kind of leads to the former narrative of maybe this is kind of going to be like a little bit of dip buy continuation. We'll see, or it could be a complete fake out. It could be a complete fake out. We've seen it before where the market reacts one way on macro data and then reverses a day or even 2 days after. So we'll be watching, of course, but it's going to be interesting.
No, it really will. We did get another question coming here, so let's go ahead and take that. I want us to take a look at Tesla, everybody's favorite EV maker. Said they announced price drops. What are our thoughts? Well, let's see here what's going on with Tesla. So, obviously we were kind of down in the dumpster here coming into the beginning of the year, and they have been on a very big run here on Tesla. So quite the increase. Let's see how much. Go. 154% seems pretty decent, for a year. I would take that rate of return. But yeah, if they're going to be dropping prices and obviously everything going on, in the South China Sea with some of their plants being in China, obviously that could cause potential issues if conflict does erupt in Taiwan. Not saying that it will. but definitely a potential there. It looks like we're kind of sitting, or we bounced rather, off of the 200 here, if I'm not mistaken. Or no, that's the 50. I'm mistaken. My bad on that. But from a technical standpoint, it's definitely in a short-term uptrend and a fairly long-term uptrend. Let's draw that, shall we? Because we love lines here. Let's draw some lines. See if I can't make that look really nice. Yeah, not really. It doesn't want to behave. So there's general. There we go. That's not too bad. In general, that's kind of where we're at as far as technicals are concerned. So definitely in an uptrend here. Them dropping prices, in some ways, I kind of feel
Nothing
like
new.
that could
Nothing
be
new.
what
Nothing
was
new.
that?
Nothing new.
Nothing. Oh, it
They
isn't?
fucking drop prices every 2 weeks. Nothing new. Sorry, I've
Fair
just been
enough.
biting my tongue. I've just been biting my tongue, just waiting because like nothing fucking new. It's every 2 weeks. Doesn't matter. Nothing
Well,
burger.
Elon's
Taiwan's gonna
got
be nothing. Taiwan's a nothing burger. Price drops her. It doesn't fucking matter. This shit gets bid up anyways. There's no point. There's no sense. Anyone tries to draw conclusions or correlations on how this thing trades via macro price drops. Elon says Taiwan, China, nothing matters. None of that matters. It's pure sentiment, pure technicals, pure price action. Simple. That's it.
there you go. There's the Riz quick and dirty answer for you. That answers it for you. So I guess nothing to worry about as far as Tesla's concerned. I want to thank everybody for coming out tonight. As always, it was great having all of our elite members here. Really hope that we can get more of our elite members here later. So if you're watching this on the replay and you're an elite, what are you doing? Why are you not here tonight? You should be. Because this is where the cool kids like to hang out. We want you to be part of that. So make sure you join us on our live webinar. If you're an elite, if you're watching on YouTube, make sure you slam that like button for us so we can get this message out to other people. And we'll see you in the market on Monday.